afternoon and welcome to BizTech Asian Midday Market Watch. I'm Samantha Voon, and let's start by taking a look at today's market action. So Asian markets took their cue from a strong Wall Street finish last Friday, where US stock indexes erased the losses it had incurred earlier last week. However, US stock index futures saw a slight decline during Asian trading hours. So Asian stock markets mostly climbed, continuing last week's rebound as hopes grew, whereas concerns over the potential US recession might have been an exaggeration. So this focus now shifts to critical inflation report expected this week, such as the US Consumer Price Index (CPI) data due on Wednesday. So this will probably provide clues about when the Fed might begin lowering interest rates. The market is now divided on whether or not it'll be a 25 or a 50 basis point cut in September. Over in China, the markets remains, hold on. Over in China, markets lag behind its regional counterparts, missing out on last week's rally due to ongoing worries about the country's economic slowdown. Although recent inflation data suggested improvements, it remains unclear whether China's deflationary trend is reversing. So this week, investors are also anticipating key reports for the June quarter from major companies like Alibaba, Tencent, and JD.com. So the Shanghai Composite is up 0.01%. The Hong Kong Hang Seng is up 0.26%. In Japan, a holiday led to lighter trading volumes across Asia, though the Nikkei 225 futures still managed to climb 0.74%, reflecting optimism from global markets. Over in South Korea, the Kospi is a regional top performer, gaining 1.08% with strong support from tech stocks. Over in Australia, the ASX 200 rose by 0.42%, with most Southeast Asian markets also seeing slight increase. In Singapore, the STI is down 0.84%. In KL, the KLCI is up 0.49%. Over in India, markets were set for a cautious start, with the Nifty 50 futures pointing to softer opening, now dropping by 0.24%. Sentiment was dampened by new allegations from Hindenburg Research against India's Securities and Exchange Board. And this short seller claimed that SEBI head Nadabi had investments in offshore funds linked to Adani Group. Now, this group is an entity that Hindenburg had previously accused of fraud and stock manipulation. In response, SEBI issued a statement urging investors to remain calm and not react hastily to reports. Meanwhile, Indian equities, including the Nifty and the BSE Sensex 30, remain close to record highs after strong rally through most of 2024, making them more vulnerable to volatility and profit taking. India's CPI data is also expected today and is likely to show more easing in price pressures. That's all I have for today's market updates. And to give insights to market, we have Tim Watera, Chief Market Analyst at KCM Trade, coming to us from Sydney. Tim, welcome to the show.
Hi, Sam. Good to be joining you today.
Right. So we've seen a really crazy week last week. Today it's more serene compared to how we started off last week. So what's the change since the last 7 days?
Yeah, you're right. Very much a contrast, what we're seeing across markets today versus where we were a week ago. They say, a week is a long time in politics. Same can be said for financial markets, it seems. And I think if we look at the reasons for it, obviously we're looking at that dollar yen rate. And I'd highlight the comments by the BOJ Deputy Governor last week. I think he had a lot to do with sort of calming the markets and reversing a lot of that, unwinding of the yen carry trade, when he basically came out and tried to reassure markets that the BOJ won't be looking to hike again while there is this market volatility. So that kind of kept that what was a shrinking USD and Japanese yield differential in check, and that has seen dollar yen tracking higher again this week. So I put a stop to that big unwinding of the carry trade effectively. That restored the Nikkei and also restored the US indices, which basically by the end of the week had made up most of those gains. So yeah, all in all, markets feeling better about things where they stand right now. And I think, we can look at that dollar yen rate as, that stability, giving the market some more peace of mind. But of course, we have a few key events coming up this week as well, Sam, to keep an eye on, of course.
So commodities were also affected by the volatility, Tim. Maybe you can run us through what happened with oil and as well as gold. Yeah.
Yep, sure. Yeah, so in terms of gold, so it came under some selling pressure last week. Once again, it got caught up in all of this yen, short yen unwinding that we saw happen in the market. So the good thing for gold, I guess, if you're looking at for positives, it found support in that sort of 2380 region. So that kind of, stemmed the bleeding for gold last week, and that allowed it to bounce higher. Now it's back around that 2430 level. So fundamentally speaking, I think, it's still looking pretty bright for gold moving ahead, provided that the US does stay on course with these anticipated rate cuts, therefore reducing opportunity for cost for holding gold. So I still think it could be targeting, that 2500 level before year end. So, but a lot depends on that US interest rate picture, of course. So oil, that was, that really came under pressure last week, on the that global equity market rout. That took a toll on sentiment and in turn that oil demand picture. So that's changed, of course. Now we're seeing the WTI contract now tracking back towards that $76 barrel mark compared to about 72, 71 where it was last week. So we're seeing a lot more risk premium built back into that oil price at the moment. Of course, we've heard for a couple of weeks now, basically that Iran, Hezbollah, they're looking to basically retaliate on Israel. Now we haven't seen anything happen on that front yet, but there is that risk that we could see an escalation there, and that's seen the risk premium go back into oil, and that's seen it trading higher and basically up 4% off the lows of last week. So looking a little bit more healthier for oil at the moment. And of course, in terms of the commodity picture in general, I think it's reacting to that US dollar story as well. A lot of volatility in that USD. So that's settled down a bit now, and that's allowing some of these commodities, which are priced in US dollars, to gain a little bit of traction this week.
Now, BOJ really did a great job calming the storm last week. So, not moving to this week, we also may have some storms or mini storms coming up on the economic calendar with the macro releases around the globe, right? So do give us a preview on what's to come, Tim.
Yeah, that's right, Sam. I think it's quite a heavy week on the economic calendar. Lots of things to look out for, lots of potential sparks for more volatility this week, depending on how the numbers pan out. So first and foremost, we have the US CPI and PPI levels coming out this week. So that'll give us a good indication of where the inflation picture stands in the US. Now that's important because right now markets, as you said in your intro, markets are kind of still tossing up between whether we could see a 50 basis point or a 25 basis point cut come September. And I really think that what happens with that inflation number in the US this week, that'll have a big say in whether markets move one way or the other on that. And that'll have implications, of course, for the dollar and equity markets as well. So in terms of the CPI, we're expecting the on a year-to-date basis is going to be still hovering around that 3% level. On a monthly, timeline, it could sort of tick up a little bit. So if CPI did happen to tick higher than markets are currently priced in, that's when we could see, I think, that the shift focus from 50 back to 25 potentially for September from the Fed. So that's something to watch out for. But of course, that's not the only thing this week. We've got a raft of Chinese numbers, of course, coming out later this week on Thursday. So industrial production, retail sales. So China had some good numbers last week in terms of their CPI. So that was looking a little bit healthier. So we'll see if that's backed up by the retail sales and industrial production on Thursday. And we've got a number of other events. We've got Reserve Bank of New Zealand monetary policy meeting, probably expected to hold at 5.5% after that strong jobs figure out of New Zealand last week. And of course, in the UK, we've got CPI figures there and a GDP print. Now, we know that the Bank of England, they did raise rates last month. And what happens with these, this later batch of figures, I think that'll dictate whether we get like a follow-up cut from them anytime soon or whether they hit the pause button. So, yeah, lots to look out for this week, Sam. But I think it's really going to all revolve around how that US inflationary story impacts projections for what the Fed may or may not do come September.
All right. Thank you so much for your insights, Tim.
My pleasure, Sam. Good to be with you. Thank you.
All right. So we've been speaking to Tim Watera, Chief Market Analyst at KCM Trade. I'm Samantha Voon, and this has been BizTech Asian Midday Market Watch. Be sure to keep informed on the latest market updates weekdays at 1 p.m. This video and podcast will be on our website, www.biztech.asia, as well as our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.